go, 19. All right. Good afternoon, everyone. I see you're logging in there. Good afternoon and welcome to this, our Hispanic Heritage Month closing webinar, Leveraging Data and Analytics to Expand Financial Inclusion. My name is Rene Vargas and I am the director of the Juntos Avanzamos network here at Inclusiv. Now, before we start, I just wanted to lay out the ground rules of this webinar. First of all, this webinar will be recorded for future use, and all of the materials that you will see in this webinar will be shared after we finish. Also, we really want you to participate and engage with our panelists, so please feel free to participate and write your comments and questions through the chat or also through the Q&A tool at the top of your screen. Having said that, thank you so much for joining us this afternoon, and I'll pass it over to Pablo DeFilippi, Inclusiv's Executive Vice President. Hola, Pablo, buenos días. Digo, buenas tardes.
Hola, Rene. Hello, everyone. Thank you so much for the introduction, and hello, everyone. It's an exciting topic that we're going to be exploring today, as we usually do before we dive into the topic. I wanted to just give you a quick update on where we are at the network level. So let's just do that quickly. I'm very happy to share with everyone that the Inclusive Network continues to grow. We're close to 500 members, and we expect to close the year at that number. You know, numbers for the sake of numbers don't really matter. You know, what's important is to recognize that this network is really made out of, institutions that are really committed to financial inclusion. Most of our members are low income designated, they're CDFI certified, Juntos Avanzamos designated. So this is an important representation of our industry's commitment to financial inclusion and community development. So we're really happy about the number of institutions that have joined and this platform that we're building collectively to deliver services that are relevant and affordable, but also sustainable to our communities. Really quickly, I also want to give you an update on what's going on with Juntos Avanzamos. As you know, this is a program that we have been leading since 2015. We have now 128 credit unions that participate. They offer services in 28 states. DC and Puerto Rico, serving around 10 million consumers, 147 billion in assets, almost 1,000 community branches, and we do all this work with 16 national partners. So this is really an important development. The network continues to grow, and we thank everyone for their participation and support. Happy Hispanic Heritage Month. Feliz Día de la Hispanidad o Mes de la Hispanidad a todos. This, as Rene mentioned, this webinar is going to conclude the series of conversations we have been having around the importance of serving the Hispanic community, the opportunity that the market presents to us, that we can do this in a way that is responsible to the consumer, sustainable to the institution. And the topic today is going to precisely highlight the business case of serving the Hispanic community. A quick announcement. I'm sure that everyone is being concerned, and we have received a lot of communications about what's going on with hurricanes in Puerto Rico, in Florida. We have been working across around the clock, actually, to make sure that we deliver support and assistance to our members, specifically in Puerto Rico. We have partners that are doing the same in Florida, but in Puerto Rico, the Inclusive Network has been very focused because we have 92 members on the island. So we worked with the National Credit Union Foundation to raise funding that we were able to deploy in record time. And thank you, Rene, and our colleague Keishla, who's behind the scenes right now. But they did an amazing, amazing job in terms of getting resources to our members on the island. So thank you for Renee for that, and to everyone who supported CU8. It's an important tool that we need to support and be prepared for the next event that may happen. And a quick advertisement here. In November, we have the DI Summit that the National Credit Union Administration is organizing. That's going to be from November 2nd to the 4th. It's going to be a hybrid event. I hope that people here register, participate, become engaged with the conversation. On Tuesday, November 1st, we're going to be hosting a DI Tuesday event. It's going to be a reception, something that we did at the GAC. We'll do it again at the summit in partnership with the African American Credit Union Coalition, with National Association of Latino Credit Unions and Professionals, and with the CU-DI collective that represents, every organization in our industry that is interested in supporting these conversations. And with that, let's dive into the topic today. We have an amazing lineup of speakers. Natasha Madan, who's with Experian, Director of Product Analytics. John Hogan, VP of Community Relations at Excite Credit Union. And Victor Corro, CEO of Coopera. So let's dive in now. We're going to start with Natasha. We want Natasha to give us, the lay of the land in terms of data analytics, right? Sometimes we feel like we're flying blind when it comes to directing services and lending to minority consumers. So Natasha is going to give us a little bit of that background so we understand what tools are available to make these target markets more visible to us. And Natasha, you are muted.
Are you able to hear me okay?
Perfect.
Okay. Hi, everyone. I am Natasha, Director of Product Analytics at Experian, and I work very closely with lenders, kind of showing them the value of Experian data. My prerogative is a focus on alternative data, specifically to drive financial inclusion, and to showcase to lenders and clients such as yourself to how to safely grow your business, right? As part of our partnership with Inclusiv, we provide financial resources to Inclusiv's network, and that includes credit solution, credit education solutions, really again with the goal of driving safe financial inclusion. Let me share my screen. Okay, I hope you guys can see my screen. Perfect. Yep. So what I want to focus on in the next few minutes here in my section is how we all, as financial industry leaders, right, we have a responsibility of making inclusion a priority. And again, how we at Experian, what are we doing? What efforts are we devoting to empower our consumers, as well as clients and lenders such as yourself in your inclusion efforts, all the while ensuring safe and responsible lending. So let me start with kind of describing the opportunity, right? Let's look at what the current state looks like. Who are the consumers who have access to credit today? And who are the consumers that don't have access to credit today, right? So the chart here, this is based on September 2020 data. It's combined with US Census data. So we start with a total of 255 million consumers. That's that gray bar on the right. So of these 255 million consumers, about 80% have enough in their credit files to generate a credit score, which is, again, kind of the basic thing one needs to get access to credit, right? So 80% have enough to give them a credit score, but 20% don't, right? And of that 20%, we've kind of broken it out. There are 28 million consumers that are credit invisibles. And when I say credit invisibles, what it means is that they don't have a credit file at the bureau. So 28 million credit invisibles. Then there is another 21 million that are unscorable by conventional credit scores, meaning that they have a credit file, but not enough in that credit file to generate a traditional credit score. And again, the main reason somebody would be not scorable is maybe they're new to credit, right? Maybe they've recently opened their first trade line, or they've lost access to credit and they haven't used it in some time, right? So again, multiple reasons why a consumer could be unscorable. Again, 21 million of those, right? Now, in addition to that, there are about 57 million consumers that have credit scores, but they're scored as subprime. And as a result of that, many lenders typically would not lend to them, right? Or would significantly or charge them a significantly high interest rate, right? And of course, I mean, a lot of these consumers may have some negative information on their file, right? But that may represent only a limited view, right? Because again, all of us are, credit people, right? We all know in the absence of recent positive history, even a small amount of negative information can significantly drag a person's score down, making it difficult for them to get access and reestablish credit, right? So again, a total of this, right? If you sum up all these three segments, it's a total of 106 million consumers. That's about 41% of adults who face some genuine barriers in accessing credit because, again, lenders see them riskier, right? Now, in my next slide, I've kind of broken this out by ethnicity. So when we look at this by ethnicity, you can kind of see the disparity in access to credit by ethnicity. So the chart on the right, it shows the distribution of those same risk segments by ethnicity. And if you look at the Hispanic bar, that's the second last from the right, there are about 16% Hispanics that are credit invisible, 10% that are unscorable by traditional scores, and 29% that are subprime and below. So that's a total of 45% of the Hispanic population that lacks access to mainstream credit. And again, these could be young adults, they could be low-income individuals, or immigrants that really need help in getting access and establishing credit, right? And if you compare this against, let's say the white population, only 36% of the white population lies in that subprime and lower tier. So again, Hispanics are 1.8 times more likely to be credit invisible or unscorable. Then I want to show you one more view. So what this slide shows is who are the ones that are inquiring for loan products versus who are the ones actually getting it. So on the left-hand side are inquiries that are coming in for different products by ethnicities. And on the right-hand side are the actual originations from these ethnicities. So kind of the way to read this is, let me give you one example. So if all of the inquiries coming in for auto, so that first couple of bars there, so the very first group on the left, about 55% of all inquiries are coming in from the white ethnicity, 15% from the African-American ethnicity, and 26% from Hispanic, 3.7% from Asian. And when you look at the right-hand side, so that's the distribution of the originations, and again, look at the auto originations, the bar for white is much higher. So 26% of auto inquiries are from Hispanics, but only 20% actually end up getting the loans, right? So again, showing that the distribution of populations inquiring for credit versus the ones actually getting the loans is very different across ethnicities. And again, how lenders can address this disparity is by expanding data assets, right? That will allow them to get a better view of the risk of their consumers that are currently excluded, right? So let me shift gears a little bit and let's talk about the data assets that can be looked at. So what this slide highlights is kind of the journey of Experian and the commitment that Experian has made in making different data assets available to our clients. So our journey started way back. So in the 1980s, Experian has been the industry leader by providing credit reports, by providing scores and attributes. In 2001, we began driving trended data and attributes into the market, and that allowed our clients to see trends in payment behaviors and credit behaviors of their consumers. Then in 2009, we introduced rental data. So that gave insights into things like rental evictions or stability, velocity of address change kind of information. Then in 2017, we acquired Clarity Services, and this has picked up a lot of momentum. This really gave our clients better insight and visibility into payment behaviors on, things like small dollar installment loans or point of sale financing, rent to own or payday type of loans, right? That are typically used by consumers that are marginalized, right? To again get access to some sort of credit. Then in 2019, we empowered consumers to contribute consumer permission, utility and telecom type of data instantly to their credit reports in the form of Experian Boost. I'm sure you must have heard about Experian Boost. Great product, truly meant to empower end consumers to contribute positive utility telecom data and also allow lenders to take into consideration these type of payments for better lending, right? After Boost, we also started delivering property data on consumers. That was in 2020. Very recently, we've established the ability to provide verified income as well as employment information through our Experian Verify product, as well as SSN information through our ECBSE product, again, for clients to safely grow their business. We have also recently launched a score called Lift Premium, and I'll talk about that in the next couple of slides. This is one of our most powerful scores, and that brings together traditional credit data. It brings together expanded FCRA data, as well as advanced analytics to truly offer our clients the ability to score more consumers and score them better, really, and fine-tune the risk assessment of their applicants. And we're seeing the score truly outperform other generic scores out there. Great product, seeing a lot of interest from our clients in wanting to test the score. We have also recently made a lot of strides in the banking space. So we've partnered with Check Systems, and the goal again to provide deposit and DDA level data to lenders to help assess the risk of consumers, specifically consumers who are thin files, subprime, who could really benefit from the usage of alternative data. So again, the goal is for lenders to be able to evaluate their applicants in a more comprehensive manner than ever before. So again, knowing this, let me just focus on two specific data assets in the next couple of slides here. So the first one, again, both of these, one of them is a score, the other one is kind of a data asset. The goal of both of these data assets is to help lenders, again, drive safe inclusion. So the first one is Lift Premium. So let me talk about the score in itself. Again, a very powerful credit model. It's basically powered by 4 distinct data points. So the first one on the slide is traditional credit data, and that's leveraged through Experian's premier attributes. Then the second data point that goes into the score is, again, our Clarity data, and that allows lenders to see another side of consumers and their behavior, again, on payday type of loans, title loans, rent to own type of loans that are typically not captured on a consumer's traditional credit file. So it takes into account Clarity data. Then the third component feeding into this model is trended data. And again, that's particularly useful in the post-pandemic world, right? Especially after the CARES Act, because it allows you to get a view of consumer behavior kind of before the pandemic, during the pandemic, and after the pandemic, and look at kind of curative behaviors. And then the fourth data point feeding into this model is full file public records. So that essentially helps you identify 300 million consumers simply by looking at behaviors that speak to the stability of that consumer, right? So things like state and county tax records, or their address change information and things like that, how often a consumer moves from one address to another. So again, that's kind of how Lift Premium, the model, has been built. So let's, in the next slide, let's look at the impact of Lift Premium, right? What does it actually help do, right? So with lift premium, if you look at the chart on the left, so we start with that 21 million consumers, right, which we had in the first slide that were previously unscorable. So that's that bottom blue level. So virtually all of those 21 million consumers would now become scorable through lift premium, and about 1 million of those consumers would now have scores in the near prime range or better, right? On the right-hand side, that chart, so in addition, right, 57 million consumers, remember 57 million consumers were subprime, right? 6 million of that 57 million would now be upgraded to near prime or above, again, largely becoming eligible to mainstream credit. And then we also conducted a separate analysis on those 28 million credit invisibles, right? It's not captured in this chart, but about 2/3 of those would now be scorable through lift premium. So again, there is tremendous potential in using expanded data assets to assess consumers better. And in this case, you can see kind of how Experian lift premium helps you score your consumers better and truly take into consideration everything in their traditional files as well as alternative files to kind of help give them a better risk assessment. So that's Experian lift premium. Let me talk a little bit about Clarity data. So Clarity Services, this was an acquisition made by Experian in 2017. Clarity is the largest nationwide FCRA regulated credit bureau, and it specializes in gathering and providing information specifically on non-prime consumers. Great coverage, about 60 million plus unique consumers. It represents majority of the US non-prime consumer population. Typically lenders that are contributing into the Clarity database, they're a good mix of kind of non-traditional and traditional underbanked lenders. So again, online, storefront, short-term unsecured installment loans, marketplace or rent-to-own type of loans, or payday loans. Those are kind of the trade types that you would typically see in the Clarity data. Again, very different from the traditional credit data that sits in Experian. Most of this data is concentrated on kind of the lower income, the younger segments, or kind of the non-prime type of borrowers. And typically lenders like to pull Clarity data to look at performance on these alternative type of trades that, again, typically wouldn't be captured on the credit bureau. So what we've done is we've created about 1,800 plus attributes as well as risk scores on top of this data that gives lenders insight into the stability, the inquiry frequency, and how consumers have been performing on these alternative type of loans. And we're seeing a lot of lenders kind of use this data for, again, for pre-screen purposes, for acquisition, as well as account management type of purposes. And then in my last slide, I just want to show you again an example of kind of the potential of opportunities. This is specific to credit unions. So this is an example of, if you use a dual scoring strategy, right? In this slide, I've taken an example of the Vantage score and Clarity's Clear Early Risk Score. So Clarity's Clear Early Risk Score, or we call it CERS, it's an FCRA compliant score, and it combines Clarity data with traditional credit data to predict the creditworthiness of a consumer. So the matrix on the left-hand side, that shows the population distribution, so kind of a cross matrix of what population is tagged in risk buckets by each of these scores, right? On the right-hand side are the delinquency rates for each of these cells. So where the opportunity really lies is in those blue buckets where CERS categorize them as less risky than what Vantage score categorized them. So for example, if you look at the let's look at the prime row on the left, so that's the second row, there is about 1.2% of the population that Vantage score categorized as prime, but CERS categorized them as super prime, right? And the delinquency rate of that segment on the right-hand side, if you see, is 0.2%. Now, the overall delinquency rate for the prime tier is 0.5%. That's at the very right-hand side of the bar of the chart. So the overall delinquency rate for prime is about 0.5%. So from a pricing perspective, right, these are the consumers, again, their bad rate is, the delinquency rate is much lower. these are the consumers that could be given better terms, better offers. And again, as you go kind of on those lower tiers, again, focusing on the blue cells, those are the consumers that can be swapped in effectively, helping you safely drive universe expansion while maintaining your existing risk appetite, right? So again, an example of how you can use, in this case, CERS, the Clarity's a clearer risk score in your decisioning strategy. So again, a lot of potential for the usage of alternative data. These are just some examples, but again, I wanted to highlight kind of how alternative data can truly help drive financial inclusion, benefit consumers, at the same time, benefit lenders. And I think that was my last slide. I'm going to pass it back to Pablo.
Thank you, Natasha. This is really fascinating. We're going to go into, a panel mode now, but a couple of things, Natasha. One, thank you to you and Experian. The partnership that we formalized this year has been groundbreaking in many ways for our network. So we really appreciate that. These tools are so important. I can take out of my mind that 106 million consumers that are kind of outside the financial mainstream in terms of access to credit. That's a huge opportunity. And I think that that's really what we want to dive in with Victor and John, right? Because knowing that we have so many people who don't have access to affordable financing options, it's definitely where we credit unions can really step in and make a difference in communities. So let's start with that. And Victor, we're going to start with you first. And as everyone knows, Victor and I are old friends, good friends. Coopera and Inclusiv have been partners for a long time. We really appreciate the insights that Victor and his team bring to the table. So Victor, let's dive in here in terms of some of the points that Natasha made across. So in your mind, why is it essential for a credit union to know and understand who their target market is, especially in terms of demographics?
Well, thank you, Pablo. Thank you for everyone for the opportunity to be here today. Victor Corro, CEO of Coopera. And why is it important? Well, data is essential for credit unions. And let me share my screen here because I like to point out a few data points. Can you see my screen?
Yes.
And the one thing that the data does is that it prevents us from assuming who our members are, our customers are, our communities are. And it will help us get away from biases, because if we don't have data, if we don't have analytics, we are assuming different things. So that's one of the things. The other thing that data does is that it helps us to see who we're leaving behind or yet to reach, especially when it comes to underserved, unbanked, and marginalized people and communities. And so what I have here on the screen is something that Coopera does, and is through data analytics. And we take the membership file from a credit union, and we use an algorithm to estimate with a 95% confidence level who they have as members. For instance, we can see demographically, how many African American members a credit union have, how many white members they have, how many Hispanic members they have. And then from there, really look into the different, the kind of engagement that the members have with the products and services. Importantly, though, for the Hispanic market and the Asian market is their language preference. As we see, Hispanics could be from first, second, third generation, and their use of Spanish may vary. And so that will determine whether a credit union needs to translate everything right now, because most of their members are Spanish dependent, or they can wait. So what I'm trying to say is analytics is very important to not assume any of these data points. And then just to see whether when we compare for instance, our field of membership to the different communities that we have in our within our field of membership, just see if we are proportionally serving them as we should. For instance, this is a fictional credit union that we have here, and through that algorithm that we have, we see that they have a field of membership of almost 4% Hispanic, yet they only serve 3.1% Hispanics as members. So there's a gap here that would suggest that the credit union needs to actually do outreach for to really get those Hispanics as members. For instance, here, African American, also they are under indexing, and in the Asian population, they're over indexing. So this is all known through analytics, and you can see, for instance, in this credit union, the population, the clients or the membership that credit union has, as compared to that field of membership. So it's important to actually know all of this so that the makeup of your membership and demographics around your field of membership. Why? This will help with the customer and membership journey experience. If we know that most of our Asian members speak Vietnamese and not English yet, we would know to have bilingual, bicultural people that understand that. What would they expect from visiting a branch or seeing the digital channels? And the other thing, very importantly, what barriers we have to open the accounts for those communities. So that will help to understand who we're serving, but mostly who we're leaving behind, and come up with products and services that are actually culturally relevant to these different communities.
That's fascinating, Victor. So when we are responding to the marketplace, you're saying we need to have a correlation between our members and the communities we serve. But how do you close the gap? That's where the diversity, right? We as institutions have to reflect communities we want to reach.
So closing the gap, really, like I said before, it's really knowing intimately the communities that we have. And since we are actually celebrating the National Hispanic Heritage Month, one of the things that we need to know is that acculturation is really important for us to know as a credit union. So as Hispanic consumers, like I said before, it really depends our identity and how we relate to companies, to brands, to credit unions. It depends on what country of origin we came from. It depends on our age. It depends on our education. It depends on the fluency that we have with English, and it depends also on that country of origin. And so we would know that Hispanics could be completely understanding and know how to function within the United States, and that would be an acculturated Hispanic. But we could have people that may be recent arrivals to the United States and may be in the other side of this spectrum, which are people that may have, still Spanish dominant. They depend on Spanish. They may be recent immigrants. They may have primarily Hispanic cultural practices. And so this would let us, if we know this information, we can close that gap a lot faster, because we would know what these folks need in terms of, products, in terms of, the staff that we need to have at the credit union, and what promotional and marketing things we would need to know in order to actually, appeal to these segments. And if we know that we mostly have, people who are unacculturated to the United States, we would need to do a lot of more things in their native language, in Spanish, to actually attract them, serve them, and keep them as members.
That's great, Victor. Just to be clear, though, and just keep this slide for 1 second. When we talk about products, bottom line is that everyone needs, access to some products, right?
Right.
For instance, there's the desire or the goal to purchase a home goes across every segment that you have here, right? So it's not that
Correct.
we're saying that what you're saying here is not that only this one group, deserves, a mortgage, right? The idea is
Right.
that it's how we deliver that product to that segment.
Right. And we would know, for instance, that the Latinoamericana, the HA5, the least acculturated Hispanic, may be a recent arrival. So they may not have that credit history that my friend was talking about previously to me. And we would need to look into alternative sources of credit so that we can offer different products and services, or, accept IT numbers in order to open an account or to actually, give a loan to the person. So analytics really helps us understand our existing membership, but also who we're leaving behind within our field of membership.
Yeah, and I love that concept of who we're leaving behind. And with that, Victor, thank you. I want to just get John here to kind of, share his own perspective. John, you were talking about your credit union in one of our calls and the journey that you've gone through, from being a credit union that was, organized to serve a specific type of member and community, and all of a sudden now you are serving a much more diverse community. Number one, congratulations on your Juntos Avanzamos designation. In many ways, Excite Credit Union, kind of fills all the boxes. You are low income designated, you are CDFI certified, now Juntos Avanzamos designated. So can you share with us, I'm going back to this question of products, what type of products or strategies you have been using to determine what products are relevant to the communities you're serving, how you're using those products to really connect and meet those needs? Can you just speak to that, please?
Yeah, thank you very much, Pablo. It's great to be here, and thanks, Natasha and Victor. I think that the way I want to frame this is how our use of that data that Natasha and Victor described have been implemented in practice in the communities we serve. And we are a 70-year-old credit union, and we're founded really as the General Electric Nuclear Division in the San Jose area or the Silicon Valley area in California. GE moved out a long time ago. They moved to North Carolina, and we also serve now in Wilmington, North Carolina. And actually, let me get up here and share my screen as well. How is that?
Perfect.
Okay. So about 5 years ago, hang on, I'm not getting my transitions here.
Yep.
Better?
Perfect.
Yeah, about 5 years ago, our CEO led a rebranding and a new focus on credit union principles. We changed our name to Excite Credit Union and really landed on this purpose, really returning to credit union roots and making sure that we were giving everyone the chance, so that inclusion aspect with a focus on building stronger communities. And on that, the renewed focus, we talk a lot about what we believe is an organization. So it's really this equity and financial access and inclusion, circulating wealth in our community, emphasizing that we're member owned. We talk about a 2-generation wealth building approach. A large part of our population in San Jose is immigrant population, many Hispanics, and as Victor pointed out, many Southeast Asian, predominantly Vietnamese. So we're really working hard to make sure people see us as a resource, and that we focus on both the immigrant parents and in their children. And often that leads to a focus on education support. Probably touched on the designations. All these are recently earned within about the past 24 months. So it's, what we're seeing is an acceleration of our efforts in this area. I want to emphasize the three areas I'm going to talk about is our branch location and our go-to-market strategies and in our program and product design. They're all interrelated and reinforce each other. And a lot of it does, Pablo, start with the evolution of our membership, and that was evident in the kind of data that Victor mentioned. And we know who our members are and our staff are. This slide here is pretty, obviously it's very dense, but what it shows is a zip code in the San Jose area. In this zip code ranks 39th out of 39 zip codes in our community on what's called the Social Progress Index. So you can see this covers health and access to sanitation and medical care. And this really is a community where our members live and that we're serving. And in fact, one of the things that happened for us in the last year or two is we actually opened a branch in this community. Rather than going away from this community, we went into this community, which is really a financial desert. We're the only credit union in the community. And this is where we celebrated our Juntos Avanzamos designation just a couple of months ago. We, in fact, are in that that corner right there is our newest branch. The sign is not even up yet, but it's coming soon, they tell me. And we're on the ground floor of a 100% extremely low income housing development there at one of the major intersections in East San Jose. I'm very proud of that. In North Carolina, we took a little bit different approach. We weren't ready to open a branch there, but we implemented a mobile branch. And so these two things really relate to our core partner strategy. In California, we're most proud that we were actually invited by leading nonprofits in that community. They asked us to come in and open the branch in that community. And we're very proud of that. In North Carolina, we partner with the Wilmington Housing Authority, and we regularly visit their affordable housing sites on a scheduled rotation to bring financial literacy education and individualized support right to those communities. So in general, our go-to-market strategy and our product development strategy has a lot to do with what our nonprofit partners tell us and ask for. And, to tie back to that question about product design, they need to go hand in hand. So as Victor mentioned, we're really proud of our I-10 lending work. We can open deposit accounts for persons with I-10s, even we'll open accounts for persons without any US number. And in the lending side, we do our I-10 lending on exactly the same terms as our Social Security lending. No different loan to values, no different rates. We're very proud of that. And I know in the past, you've had organizations demonstrate that their I-10 loans perform better than their overall loan portfolio. So we're all very proud of that work.
John, let me just jump in here because I think that what you said is really important. There's this perception that if you are doing I-10 loans, that there's additional risk. Clearly you have come to the conclusion that the risk is not there. That I love that concept of financial inclusion making as an equalizer, right? This is not about creating something for those people. This is about making our products and services available for all, right? I really love that concept. And this is very consistent with what I keep hearing from credit unions that are Juntos Avanzamos designated, that they don't see the reason to charge more, to I-10 borrowers. So thank you for saying that.
Yeah, thank you. And we truly do believe that. And I know one of the things that you wanted us to chat about also, Pablo, was our children's savings focus and the products that we've developed there specifically to respond to our community needs. And I think this is the best example of how data and information has influenced our product design. We knew this data, which was, was about 10-year-old data that shows that low-income children with $500 or less designated for college savings are 3 times more likely to enroll in college and 4 times more likely to complete. So that's very, very powerful data. And about 4 years ago, we rolled out what is probably the greatest children's savings program in the country, where we open the account. We put $50 in the account for the family. We'll match their deposits for up to $25 every year. We pay bonuses on the children's birthday, and we pay 5% dividends on the account. It's really quite amazing. We rolled it out, and we're overwhelmed with the response. Well over 500 accounts in just a few months. But then we looked at the data, and the people opening those accounts were our higher income members from our higher income communities. And it was, frankly, it was exactly the opposite of what we hoped to accomplish. So the data told us we were doing something wrong, and we went to talk to our friends at Prosperity Now, and they really showed us about a different way to approach children's savings with what are called opt-out children's savings programs, or automatic enrollment, where you target certain audiences. And you can see how these programs have grown around the country. And we now have launched ours, called College in My Future. And so what we did is we actually don't offer the product I described a minute ago to the general public any longer. We only offer it through our partners in low-income communities and through school districts. And we actually, with school district partners, we can automatically open the accounts. So an example is, for all of our first graders in a school district, a low-income school district, we automatically open 600 accounts for each of them last school year, and this month we're opening another 600 for the next class of first graders, and we intend to do that each year. And that still has the opening deposit, the matches, and the high interest rates, the dividend rates on it. And we're going to add a second school district, so also later this year. So we're really very proud of that. I know I won't show this video now, but when you share the slides, I hope people will be able to look at this. I wanted to put a face to these projects, and I think you'll enjoy this video if you get a chance. And in the last note I wanted to make on this for folks to review is maybe looking up this report, Advancing Equity. I think it tells in story terms how we got where we are, some of the historic parts of our country that have led to this credit invisible and credit unscorable communities, and how we can better access them and support them. And that includes some tremendous case studies. So thank you very much, Pablo.
Well, John, that's really fascinating. My wife is a school teacher, so I'm so glad that you guys are doing this. This is about building generational wealth. And as you said, it's very consistent with your goal of, what is it, the 2-generation approach, so it's so critical, that our kids learn to save, learn to understand that the power is not on how much you make, it's in how much you save, right? It's your spending that needs to be under control. So congratulations on that. That's amazing. And I think that really takes us back in terms of data. It's really valuable, but only valuable if you do something with it, right? So I think that the challenge now is for us to discuss how we make good use of that data, so we are actually not just moving the needle in our communities, but we're actually engaging our teams in providing solutions that are reliable and accessible to the community. So Natasha, we're going to go back to you. We still have I think that 10 minutes. So let's talk about what other source of alternative data can Canadians leverage to drive predictiveness in terms of defaults and delinquency and behavior, of course.
Yeah, absolutely. So again, apart from the ones that I already spoke about, right? I mean, traditionally, it's been the traditional credit file, the scores and the attributes that are most predictive of a consumer's creditworthiness. but their behavior on alternative loans, that's another data point. Another very promising data point that is proving to be very popular is kind of looking into a consumer's DDA data, right? So this is, we've recently launched a product, it's called Banking Insights. It's in partnership with Check Systems, which has traditionally been very popular again on the DDA side of the house, right, for clients. But it's getting a lot of traction on, basically looking into a consumer's information on direct deposits or their insufficient funds or, account closures and things like that. Lenders are really looking into this additional source of data to evaluate a consumer's creditworthiness and their ability to pay. So again, looking at kind of, what sort of DDA inquiries have they had? How many of those, when was the last time they had a DDA inquiry? How many account closures have they had, right? DDA account closures. How many bounce checks have they had? Did any of those bounce checks get paid, and to what extent did they get paid, right? Then a little bit about kind of their check printing history and things like that. Check cashing history, right? How many checks did they cash? What was the time period that they cashed? So again, the timing of these events and the volume of these events is typically a driver of a consumer's creditworthiness. So again, this is kind of one of those data assets that is proving to be very popular, and a lot of lenders are kind of evaluating this data asset to drive inclusion and evaluate their consumers better.
Thank you, Natasha. I visited with your team in Los Angeles a couple of months ago, and I was really blown away by the level of innovation that is taking place in your shop. So what else is happening that you haven't told us yet? What else can we expect, hope for, from Experian in the near future?
Yeah, no, great question. Inclusion is a core commitment for us. We really want the Consumers Bureau, and as part of this, we've launched a first of a kind program. It's called Inclusion Forward, and what this program does is it harnesses experience data. It brings together analytics and technology, and helps create and provide more affordable credit access and really help clients achieve their DEI goals. So what Inclusion Forward is also poised to do is it provide resources for consumers, so consumers can better understand kind of their credit health, right? And this is particularly important in diverse communities, right? So that's one. And then, from a lender's perspective, the real magic comes to life, when we bring together kind of new sources of data, but at the same time, technological innovations, right? And for clients to be able to test these data assets, build sophisticated models, right? We know a lot of lenders have been traditionally very slow in, the usage of and using alternative data assets when making credit decisions, right? And why is that, right? One of the reasons is kind of the difficulty to build and deploy sophisticated machine learning models too, right? And we all know kind of, when it comes to changing a business process to take advantage of new data, those changes can be lengthy, they can be costly, and honestly very complicated, right? So that's where Experian not only kind of provides the data, but also the technological know-how and the heavy lifting. We do the heavy lifting on the lenders we have, and we have solutions like Ascend Go, like Ascend Intelligence Services. We have Attribute Toolbox that really kind of helps clients and lenders test these data assets, build models, reiterate between these models, and really test and deploy all of these data assets much faster than ever before. And really, speed to market is key here, right? So really help kind of provide those first and second chance opportunities to consumers who really deserve it.
So more tools coming up. That's
Yes.
great. Well, thank you, Natasha. I appreciate it. We do have a few minutes for some Q&A, Renee.
Yes, we do. And we have two questions. First one is for Victor. And the question is, it's from Chad Beach. And the question is, can Victor expand more on how Coopera can, without a member self-identifying race or ethnicity, this type of demographic analytics?
Sure. So the first thing that I need to say is that what we do is based on an algorithm, and then we do partner with a and I have it right here now, so you can see it, the Hispanic member analysis. These are folks that have not self-identified to the credit union. This is an algorithm that actually based upon about 42 different sources, from where the person lives, what they look online, their presence online. This is all data that is actually being recorded and tracked from every consumer in the United States. So we partner with Claritas and Nielsen to actually put the credit union's file through this algorithm, and the algorithm estimates with a 95% confidence level, who's Hispanic, what acculturation level they have, who's African American, who's white, and all the different demographic information. So again, this is not perfect. This is with about a 95% confidence level, but that's a way to estimate the ethnicity of the membership and the field of membership of the credit union, so that we can actually compare field of membership to actual membership. And again, see who we're leaving behind or who has yet to join the credit union and what kind of engagement they have with our products and services. And then even further, see if that engagement with products and services really bring about financial health for that consumer.
Thank you, Victor. And Chad, I hope that answered your question. So we have another question, actually two questions in one, I would say. One is from Edgar Hernandez and another from Gloria Escobar, and I believe these are for Natasha. The questions are, does Experian offer the ability to bridge/merge a consumer's credit data from their ITIN history to a social security history? And Gloria also says, when I request a credit history for a member with ITIN, the ITIN number is not there.
Yeah, exactly. I'll have to, sorry, I don't have a downright, response to the questions, but that's true. I mean, like credit, the ITIN is typically not part of the credit report. We are doing some studies internally. We recently got a very similar question from one of our lenders where they sent us a file. So we are kind of trying to internally figure out a way to match the SSN and ITIN and link it back to the credit report. More to come. I'd be happy to connect, offline and share some of those results as soon as I have them. But yes, that is currently a project that is in works.
Wow, that's great. Thank you, Natasha. And I hope Edgar and Gloria that answered your question. And I do have a member that has its hands up, Andrew Reynolds. So if it's okay with everyone, I'm gonna allow Andrew to ask a question verbally. That's okay. So Andrew, I'm just going to go ahead and activate. Oh no, it's gone. Okay. So Andrew, did you have a question? Or was that by an error? Accident. Oh, okay. All right, no problem. Any additional questions? We have 2 minutes before we thank our panelists for such an engaging webinar. Questions, comments, please feel free to use the chat. There we go. Anthony Walker. Anthony has the following question. Where can we find the social index zip code report? And I'm guessing that
that was one of my slides.
There you go.
Yeah, thanks, Andrew. It's called the Social Progress Index. And at the moment, I can't tell you exactly where to find it, but I can figure out where I received it. It was something that the city of San Jose really made a big effort to push out, but I'm pretty sure it covers a lot of geographies. So if you want to follow up with me or through Renee, I'll be happy to help you try to figure out where we got that information.
Excellent. So we have a minute. Any additional questions before? Oh, there we go. Jennifer. Thank you, Jennifer. Anthony, Jennifer just posted the link. Jennifer always with the save there. Thanks, Jennifer. Anyone
Thank you.
else? Any additional questions you'd like to ask for our panelists before we depart? Well then, it is 2:00. On behalf of Inclusiv and Juntos Avanzamos, I want to thank everyone that joined us this afternoon for our Hispanic Heritage Month closing webinar, leveraging data and analytics to expand financial inclusion. I also want to thank Natasha, Victor, and John for their participation, and of course, Pablo for moderating this panel. We will be sharing the slides and also the recording of this webinar in the next few days so that you can share it with other staff and team members if you're interested in doing so. Thank you so much and have a great afternoon and end of Hispanic Heritage Month. And for the panelists, please stay. I'm going to be taking a picture before we move on. Thank you. Just 1 second, let me go ahead here.